Hello everyone, and welcome to the Devil Dog Day Trade community. If you haven't seen one of our sessions yet, my name is Michael and I want to thank you for joining us here as we work together to own our financial goals. We don't need professionals to do this work for us. My goal is to help you learn the essential structure you need to day trade. In episode 5, we are talking about our approach to day trading cryptocurrencies. At the end of this episode, if you missed out on steps 1 through 4, please be sure to visit the episodes in our Day Trading 101 playlist on our channel. This is a 2-part session, so please make sure you take a look at both of the parts to get the full picture. Our agenda is 2 parts here: modification of the supply and demand structured approach, and then we'll follow that up with our final rules and overall trade process. As we get into how we're modifying the supply and demand process, we're going to look at context, curve, and zone structure and apply a rating system to them. The scorecard for these ratings will be shown in part 2. Starting with context, move over here to our Bitcoin daily chart. All of our context will be set on a daily chart. And we have customized a Fibonacci tool layout here that you'll see in the chart that's broken up into 4 sections. Now these 4 sections will have ratings assigned to them based on the direction of the trade that we're taking. So remember, right, you want to buy when price is low, sell when price is high, so that's just a clue for where the ratings would be placed in here. If we're buying something, so getting the long position, the bottom of the chart will have the higher rating. So right in this area, if the price is here, it will be a 4. If price is up in this middle area, it'll be a 3. The next area up, it'll be a 2, and a 1 in the top area. Reverse that for any short trades we're going to sell into. We would want the highest rating up on top would be a 4, next one down will be a 3, and then a 2, and then a 1. Now, the reason why this is a little bit different in context between our normal approach is if you take a look at something like Shiba coin, you'll notice that there isn't enough data here to truly set context. So for any cryptocurrencies that we can't do that in the best manner, we're just going to take a reasonable approach to it. As you'll see here, I've just selected this high up here and this notional low down here, and that's how we're going to set context. So it'll be a little bit looser and not quite as structured as we've done in some of our other sessions. Moving on to trend. So if I want to take a trade on a 60-minute time frame, remember we want to go 4 time frames up to set our trend, so that would go to the 240-minute time frame. And as you can see here, succession of lower highs and lower lows moving down here, this is a very clear downtrend. So if you're taking a trade, jumping back over our 60-minute chart here, so this trade that we're looking at right here that we would want to get into, this is a short position, so therefore we would be with the trend. That we have 3 on the scorecard. If it's a complete sideways trend, in other words, not moving up or down, that would be a 2. And anything that is counter trend means we're going directly against the overall trend, that would be rated as a 1. Moving on to what our zone structures look like, and I'll demonstrate that here on our 60-minute chart. We typically have very strict rules for our other securities that we trade of what the zone structure looks like based on our supply and demand. That's based on having tracked thousands and thousands of those zones, and so we've been able to really fine-tune them to show what works the best. We don't have that data yet for cryptocurrencies, so we're going to start just to be very loose about it and just say anything that remotely resembles a zone we're going to track. We are going to rate them, however that rating is a little bit more subjective. So the zones that clearly fit our overall process and that look really, really solid, we'll label a 3. The ones that are just average and okay, we'll rate a 2. And the ones that are very messy but still meet the bare minimum qualifications, we'll rate a 1. Overall, we're only going to use 2 odds enhancers in this approach. Again, trying to keep it simple. First one is going to be the RSI indicator. That's this chart you see at the bottom down here. And we're only going to look for negative divergence of RSI. If we have that, as price is moving into a zone, that'll be a +1 on the scorecard. The second indicator we're going to use is the Bollinger Band. So you see that here, but the green and then the red lines here, these are the 2 standard deviations from the mean. If price is above or below each one of these areas, when price comes into that zone, that would be a +1 on the scorecard as well. And that's it for today's episode. Thank you for watching. If you have any questions about this discussion, please comment below, and don't forget to hit the like button if you've enjoyed this lesson. I hope you join us for the next episode, where we'll discuss the very specific crypto trading rules and process that we're going to use. Make sure you subscribe to the channel so you won't miss anything in our upcoming learning videos. And thanks again for joining, and I hope to see you soon.